The rates, when they go up, the property prices go down and the yields increase. Because the rate doesn't necessarily go down with the property price, right? So, yeah, I mean, if we see the interest rate market come down over the next year or two, then I think the yields will also come down slowly. So that's why I still believe that now is a great time to buy for most investors if you're buying wisely.
Yep.
So, yes, cost of borrowing is expensive, but if you're buying the right property, with the right fundamentals, you can't really go too wrong.
Welcome, Zhiyang, to the Auckland Investment Club. So what is the Auckland Investment Club? Look, we're a community of motivated and inspired investors, and our philosophy is shared knowledge and encouragement. So what we're trying to do is interview successful investors throughout their journey and help those that want to be successful investors, maybe they're partway through their journey, with their decision making and challenge them as they come up on their own problems and figure out ways to solve them and connect them with people that will help them solve those problems. So we know that money makes the world go round, and then capturing a significant slice of that money for yourself is an exchange for you bringing value to your clients, your suppliers, your investors, and the community, and your team members. And then when you make that money, what you're probably going to end up doing is helping others with it in the community and your family and your friends and enjoying your time. So I wanted to get you here today because you're a friend of mine. You're a top advisor, a mortgage advisor with Mortgage HQ. You got ranked number 2 in the recent charts, settling 170 million in that 12-month period, was it?
Yeah.
So how many clients is that? Or a couple hundred clients that you would have helped settle?
20 a month, so maybe 240, 250 clients.
Yeah, basically every working day you're helping somebody settle on their mortgage. You're an investor in non-property assets, your crypto, your shares. I'm guessing there's a few little investments you've got over to the side of property. You've got a few properties and developments underway. We can talk about that. You're a family patriarch and you're a competitor, nationally ranked table tennis competitor, I understand, and that you're also amateur fighter, poker player, and so that's what those skills and hobbies make you who you are. So why don't you tell us a little bit about your investing to date and who you are?
Yeah, cool. Thanks for the introduction, Andrew. Yeah, so about myself, for those who don't know me, like you said, I'm one of the advisors here at Mortgage HQ. I've been here for a good 6 years, so I've been an advisor for 4 years now. Outside my work, I do a bit of games, table tennis, fighting, as you mentioned. So yeah, it's just a brief introduction about me.
You don't have to shy away from the gambling side of things. You guys, your sports betting and gambling is a way to analyze problems as they come up and look at probabilities. And how do you think about that?
Yeah, well, I mean, gambling is, I would say it's a recreational activity that I partake in. And yeah, I mean, a lot of people think it's, you're throwing money away.
Well,
I like to see otherwise.
You're not gambling if you're winning, right?
Exactly. You're working if you're winning.
Yeah. And I guess it balances out on the investing side of things, which is far more analytical.
Yes,
and
100%. It's just risk and reward at the end of the day.
Yeah. And so how do you think about yourself through your job? Are you thinking about, do you think yourself as a coach or as an advisor or as an investor that just helps other people invest? Like, describe what a financial advisor does and how that gives you an advantage in your own investing.
Yeah, look, I guess what I am, I would say a bit of both, a bit of everything. Sorry, obviously I'm a financial advisor. Yes, I am a coach, and I would say I'm that person that gets you a loan as well. So I'd say jack of all trades. But in terms of how it helps my job, helps my investing, I would say I get to see a lot of other clients. I get to see what they're doing. I get to see what a lot of successful clients are doing. Yeah. So, it humbles me quite a lot of times because sometimes, you might think you know everything. You might think you know a lot, but then you see someone who's done a lot better. And there's always a bigger fish.
Well, yeah, certainly families that accumulating, properties by the dozen rather than, single properties.
Yeah.
And I guess that's kind of an Eastern philosophy of pooling capital and growing a portfolio. How have you learned from that?
I guess when I see a lot of Eastern families, Asian families, a lot of, Middle Eastern, Indian families, a lot of them actually do things together. And It's a lot stronger. You get a lot more leverage by doing that, because obviously you're pulling everything all together, and you get more income, you have more equity, so you can do a lot more things by doing that. It's just a cultural thing as well, I guess. It's being successful as a unit as opposed to as a small family.
Yeah, there's a famous parable from Manish Pabrai, who shamelessly cloned Warren Buffett's original partnership model.
Yeah.
And he wrote a book about, I can't remember the name of it, but it's a style of investing. And he talked about the Patel family in America and Canada that they own some crazy amount, like half the motels in America are owned directly by Patel family members.
Yeah.
And the Indian families pool their resources.
Yeah.
They all live together until they can afford it.
Yeah.
And then they save until they can buy that motel.
Yeah.
And then they expand their portfolio that way.
Yeah.
So definitely can see that it works.
Yeah.
So what do you think, in terms of your current investments, what's your most important investment you're working on at the moment? And
yeah, I guess they're all quite important. They all play its part. And so at the moment, I mean, the one that's got my most attention is the development.
Yeah.
So I'm completing a 6-lot development in Point England. It's currently in construction. So yeah, just trying to get that across the line, because it can be quite stressful at times in construction, because you've got no income during the construction phase. Yeah, you've got to service a mortgage on the land as well as the construction.
Is that capitalized at the moment, or you're paying as you go?
I'm paying that as I go.
Yeah.
So I mean, when you're doing a construction, typically you do want to have a bit of equity to work with. Otherwise, it's going to be very challenging.
So purchase price for the land roughly
at the time, $930,000.
Yeah, and construction costs.
Yeah, it's going to cost anywhere from 1.7 to 1.9 million.
Yeah. And then what are you hoping to sell the 6? Are you going to keep any of them, or what's the plan?
Yeah, the plan is to keep them all. Eventually, obviously, I do want to sell them.
Yeah.
It doesn't really make sense to keep it. The reason I am keeping it is because if I were to sell it immediately, there's going to be a lot of, the taxman gets a lot of the equity that I generate from it. So obviously the income tax and GST agent fees, that cuts into like almost 50% of your equity that you make.
Yeah.
So yeah, if you have the ability to hold it, then why not?
Yeah, and I suppose you've spreadsheet out a few different scenarios of selling some, selling all, selling none, and what the considerations are then. Yeah,
100%. I mean, it's typically a lot of developers, they might build, let's say they build 6, they might sell 2 or 3, they might sell down half of it, reduce the debt, and they might have 2 or 3 mortgage-free, 2 or 3 not mortgage-free securities, but probably with a low LVR. Yeah. So in my case, it's going to be because I've got the ability to hold onto all of it. So I'm quite, I wouldn't say greedy, but I don't want to pay the tax man the money. So the tax. So I'm looking to hold everything.
And what investment goals have you got for yourself over the next 5-10 years?
I mean, for me personally, it's just to be able to support my family through passive income, and also at some stage, if I can't work, I want to be able to live off passive income without having to worry. Yeah. So, that varies all the time. As time goes past, you might have kids, or
just wait till you have kids, man.
Exactly. So in terms of expenses, in terms of passive income, it's going to depend on what sort of expenses come my way.
Yeah. I'm guessing you're thinking about generating a big passive income number, and you're working hard today. You're 28 years old?
31 now.
31? Yeah, I can't keep up. 31.
Yeah.
31 years young.
Yeah.
Yeah, right. Yeah. And not married yet, but getting close.
Yeah. End of the year.
Yeah. And then the kids will come. So investment goals, I'm guessing they're evolving, but what about your investment philosophies?
Yeah, I guess my investment philosophies are it's quite cliche. I mean, a lot of it's inspired from Rich Dad Poor Dad, Robert Kiyosaki. Yeah, I guess it's just building passive income generating assets. Yeah, I mean, look, the reason why we invest, or why I invest, isn't to get filthy rich, but it's the ultimate reason is to have options, right, at the end of the day. So, my philosophy is having a diversified investment portfolio. Obviously, there's a few things you can invest in. As Andrew mentioned previously, you've got your properties, you've got, business, you've got shares, crypto, whatever it may be.
Got to lose money on something, right?
100%. Yeah. Yeah, I guess the reason why, so everyone has a different proportion on how much they want to allocate to each asset class. So for me personally, because I work in this field and I'm exposed to a lot of knowledge in this field, I would say property is, I think I'm primarily invested in property. Maybe like 80-90% of my portfolio would be in property. And yeah, my philosophy with property, the reason I go for it is because there's debt, right? Yes, I might have a reasonably sized portfolio, but a lot of it's supported by debt. So
leverage return.
Exactly. It's leverage return. And yeah, my philosophy with debt is, debt is a double-edged sword, right? So if you don't utilize it properly, it can be very dangerous. But if you utilize it properly, it's a very good tool for you to build wealth with. So I guess it's always about how you can manage that debt. What sort of properties you're buying, what sort of yields you're buying to service that debt. So yeah, having a good balance is quite important.
And what is the investment that you're most proud of to date?
Look, it's actually a really small one. I bought a property in Gisborne 6 months ago now, in December last year. So that property there was a distressed seller on the other end. And
was that off market?
No, it was at auction.
Yeah.
Yeah. So at the time, the bank valued the property at around maybe high 300s, and we believed it to be around that value. We got it. Our game plan was to buy it just over 300. We managed to secure it at 275,000.
Yeah.
So if you look back at the bank value today, it's sitting at around 475,000.
Yeah.
So that's a $200,000 increase in bank value.
Yeah.
Without doing anything. I obviously have done something to it. I've renovated it. I've made it healthy homes compliant. I've added a bedroom.
How much did you spend roughly?
30 grand.
Yeah.
Yeah. So
you're all in for, call it 310, 320.
Yeah.
Yeah. When you include travel and time and stuff.
Yeah. With that investment, I can sort of pull out all my deposit.
Yeah.
So, if I can find a similar deal, I can replicate that infinite amount of times.
Yeah. Well, it's a life-changing experience to do it yourself.
Yeah.
And, that it's unfortunate for the other side.
Yeah.
But it was a free market and other people had the same opportunity,
Exactly.
right?
Yeah. And I think that's quite important to find those deals as well. Like when you're looking at property investors, the best ones are the ones who secure the properties at a good price.
Well, if you did that once a year for 20 years, it's $2 million of equity uplift and you're away laughing.
Exactly. Yeah.
What you got to do is stay up to date with a few different property markets, like areas that you're interested in.
Yeah.
And when the opportunity comes, you're ready.
100%. Yeah.
What about investments you wish you'd never done or the lessons learned from them?
Yeah, I mean, the main one in property would be the land bank that I purchased in East Auckland. That would have been 3 years ago now, in 2021. So
Peak of the market.
Peak of the market. Yeah, I mean, at the time, it was a very good deal.
Yeah.
It was, I would say I got it undervalued for $200,000-$300,000 undervalued.
Yeah.
At the time.
Yeah.
If you look back now, it's probably lost around 10% of its value.
Yeah.
So overall, it's still okay, but there wasn't it wasn't necessary for me to buy that.
Yeah, it's not generating income right now.
It's negative quite a lot.
Yeah.
Per year. Yeah.
Good thing you're earning a lot of money right now. And so what strategies have you kind of put in place to help you find deals?
And to find deals, I guess it's really just about having a network. And a lot of the times, you don't necessarily need to find the deals yourself. If you have the network, other people can find the deals for you. But, if you're doing things yourself, then you need to understand the market that you're in, like you mentioned before. And it's all about volume as well. I mean, a lot of the times you have to go out there and put in a lot of offers. You're not going to get the best deal on your first go, right? I think there's a saying, you put in 50 offers, 10 of them get accepted, and then you actually go for one of them.
Yeah, I mean, it wouldn't surprise me.
Yeah.
So, and most people are like 50 offers.
Yeah.
Yeah. The first time you make an offer,
yeah,
it might take you 20 minutes to do all the paperwork.
Yeah.
The second time you make an offer, it might take 10 minutes.
It's easier.
The third time, 5 minutes.
Yeah.
Then before you know it, you can make offers in 2 or 3 minutes, the paperwork, not including the due diligence.
Yeah. And the thing is, it doesn't cost you anything. There is no risk. People get really scared about putting in an offer, but in reality, if you've got those conditions, due diligence condition, they can't do it.
You got to work it out with your lawyer. Don't do work on this property until I tell you.
Exactly. So I mean, you've got really successful traders and traders out there, developers. They're putting in, 1 offer a day at least.
Yeah.
Yeah, and that doesn't hurt them.
Well, you think about if you do an offer 300 days a year,
Mm-hmm.
and only 3 of them get accepted, and you settle on 3, and you make 200 grand on each of them.
Yeah,
that's what property traders do.
Exactly. Yeah.
So, what about tips for negotiating? What have you found to work well for you?
Yeah, look, I typically don't do the negotiating myself. And so a lot of those deals that I've talked about, it was through a property finder.
Yeah.
And a lot of the times I would negotiate through my buyer's agent.
Yeah.
So yeah, I generally try to outsource that to other people who have your best interests in mind.
Yeah.
Yeah. I mean, if you're negotiating with a vendor's agent, that's a different story.
Yeah.
So yeah, just having someone on your side that's an expert in the industry.
And with a buyer's agent, there's not too many of them in New Zealand, and it's not that common, but you're looking at paying 10, 15, 20 grand, and you're expecting that amount is going to get saved for you in both time and off the price that you end up paying.
Yeah, 100%. Yeah, I mean, people don't want to pay that money, but a lot of the times they're saving you that and more.
Well, it's an investment. It's not a cost.
Exactly.
Yeah, and you're getting an expert that is extremely active. They might look at 50 listings before they bring you one.
Yeah, exactly. Yeah, they're doing all the work that you don't necessarily see.
Yeah.
But yeah, they definitely are valuable, I would say.
And what outlooks do you have at the moment on yields and interest rates, not just in property investment, just over the general kind of market in New Zealand in the next 5 years?
I guess there is a inverse relationship between yields and interest rates. So back in 2021, when the rates were low, we were encouraging clients to buy. Even 6% yields were great at the time.
Yeah.
The reason for that, obviously, when they go up, the property prices go down and the yields increase because the rate doesn't necessarily go down with the property price, right? So, yeah, I mean, if we see the interest rate market come down over the next year or two, then I think the yields will also come down slowly. So that's why I still believe that now is a great time to buy for most investors if you're buying wisely.
Yeah.
So, yes, cost of borrowing is expensive, but if you're buying the right property, with the right fundamentals, you can't really go too wrong.
Yeah, not over leveraging. So it might be that you use 50% deposit from equity from other properties and 50% lending on the investment, and you just kind of manage your cash flow that way.
Yeah, I mean, we've seen deals that even 100% financed that are still cash flow positive, right? So yes, I mean, in your case, doing 50% equity, in most cases, it might bring it to cash flow neutral or positive, but then there's still some really good deals out there.
And you got to think about return on cash. Yeah. Right? Yeah. If your return on cash is positive or even just like around neutral, then it's a gains play, right? Yeah. And if you got to trade location for the yield, and then find the right balance. You don't want to buy in the middle of nowhere if you don't have to, and you want to buy in areas that you understand and property types that you understand.
Yeah, 100%. And having those properties is good as a supplement to your main properties. You might have some properties at the main centers, your main home. Yeah, it's good to supplement that with a few high yielding properties. So.
And so what would you say is minimum kind of capital and steps to getting started in property investment?
Yeah, it really depends. Depends on what strategy you're going for. I mean, if you're going down the traditional route of, say, just buying a first home, because you can still treat a first home as an investment, right? There are deposit options of as low as 5% out there. But typically, if you're looking at buying just an investment, you're needing 30% now. Obviously, there are other options with non-banks and new builds that can bring it down lower. But then there are other things that you can do without forking up all that money as well. If you learn how to do property trading, then sometimes it could be nothing. Like I've got a client who had needed some equity. They didn't have any money. They learned how to trade, and
cash poor, asset poor.
Yeah, but then they had some funding from, I think it was family members. Yeah, that had some money left over and lying around, and they did, I think, 6 or 7 flips in 1 year.
That's pretty impressive.
And they started it without their own money. Right? Yeah. So yeah, it depends.
So what do you think that they came out with at the end of that year for their own slice?
I mean, I wouldn't know exactly, but I would imagine
they were splitting profits, maybe not even taking half the profit.
Yeah. But even then, I would say there might be ones that were not as lucrative. Some were maybe more lucrative, but on average, it wouldn't be unreasonable to say it's 50, 60 grand net per property. So
Yeah, if you're taking 20% of that, whoever's flipping those properties and running it, still probably walking away with 100K at the end of that year after tax.
exactly.
Yeah.
Yeah.
Yeah. And that's probably a side job.
It's a side job. Exactly.
Yeah.
Yeah. So, I mean, there are a lot of ways, but typically 5 to 10% is minimum. Yeah.
And so properties for first-time investors, there's definitely suggestions if you're chasing yield to look outside of the major centers.
Yeah.
How do you have that conversation?
Yeah, I mean, first-time investors, it depends as well. I mean, it depends on everyone's personal situation, but typically what we're going to see is most New Zealanders, they get stuck at, 1 or 2 investments, right? And the reason they do that is because they don't actually get the right advice. So generally, you can't really go wrong with having a property outside of Auckland because the numbers the main centre is not just Auckland, the numbers are just a lot better there. And a lot of people think that capital gains are exclusive to the main centres, and that's not necessarily true. Yeah, I mean, the regional centres obviously have a lower price point to start at. So,
well, you've got properties in Gisborne, Timaru,
Christchurch, yeah.
So,
I'm happy at going outside of the regions, and a lot of those properties I've never seen before.
You've never been, really?
Yeah. So
well, even my property in Sandringham, I've only been there twice.
Yeah.
once before we settled, and once after.
Exactly. I think it's just important to, when it comes to property investment, don't be emotionally involved in that property, because if you do, that's when things can go wrong, right? If something breaks, or if you need to fix something, that's when you might spend too much on it. But whereas I think what's more important is the numbers. We always preach that in our company, looking at property, with the numbers. Yeah.
And where do you go for your research and finding tips, and value-add strategies?
I mean, so it's everywhere, really, right? Like, information is not scarce. It's all over the place. I guess the most important thing is understanding what information to actually take on board. Yeah, I mean, for us, we've got a YouTube channel at Mortgage HQ that has a lot of these tips, but most of my learning just came from the people above me, like yourself and Blandon.
Other clients as
well, exactly, right? So
having a network, it makes you a much better investor.
100%, yeah. And having a good team around you. So, your advisors, accountants.
And when you're in that team, whether it's formal or informal, people encourage you where you get stuck.
Yeah, 100%. Yeah.
It's good to have all the tools like CoreLogic and Relab, and you get all the agent emails from areas you like.
Yeah, it definitely helps, 100%.
So how do you think about your retirement? You focused on income, you focused on equity, are you focused on being able to stop working anytime soon? No.
I love working, so that's not a question.
It's good to hear.
But I think it comes hand in hand, income and equity. Like you need to have the equity to generate that passive income.
Well, how beneficial has it been for you having the extra income to be able to do these property investments?
Definitely very beneficial, because when it comes to buying more properties, the bank's rules are very simple. It's simply just how much you can service.
Yeah.
And that's determined by income and also your equity, right? So that's something that is quite important, because your income determines your maximum leverage position.
Yeah.
So, whether that most of it's going to come from your earned income. So, I would say income is definitely the most important thing. Equity comes.
I would argue your most important investment was becoming a top mortgage advisor.
Yeah.
It allowed you to learn about investment strategies
100%,
and philosophies from other people that have done it before, but also it allowed you to get that high income to start making big investments early in your life. So compounding is happening quickly.
Yeah, 100%. And I think it's so important to invest in yourself. A lot of people think that property is the end-all be-all. You're going to get rich from property, but I don't believe so. I think that it's a good supplement to have as an investment in your life, but the most important investment is still going to be yourself, and getting yourself to a position where you can earn higher income. Once you have that higher income, you can do a lot of things, right? It might not just be property. It could be a business that you want to buy. It could be you've got more money to spend on things.
Well, income is kind of an indicator of the value you bring to market and about your skills.
Yeah.
And income, if you can't get more income from your job, there's no reason you can't go get more income from property trading or a second job.
Yeah.
You know, my old man, he was a motorbike courier during his lunch breaks and after work when he was 20 years old.
Yeah.
You know,
If
you want to get your income up,
you
can find a way.
Yes. Yeah.
And invest in learning skills that help you get a higher paid role.
Yeah.
You know, you're helping people under you now accelerate through that associate and advisor pathway so they can get their income up too.
Yeah.
For our Auckland Investment Club members, you know, where do you think they should start if they want to keep growing their wealth faster and learn more about property investing?
Like I said, our YouTube channel is a really good place for free content. Yeah, I mean, yourself and Landon, you guys probably post at least once a week.
Yeah.
That's a good place to start. I mean, there's, like I said, there's no shortage of free content and free information on the internet. But just watch out who you're getting the information from as well. It's, sometimes it can be there might be a hook attached.
Yeah, man. Sweet. Well, thanks for coming along, Z.
No worries. Thank you, Andrew.